If you've been an investor like myself in the last 2 months of the stock market, your portfolio is probably in negative territory. The reason why it all started off with December job reports number, where they actually reported pretty good numbers. We created 256,000 jobs and our unemployment percentage is at a 4.1. Those numbers essentially mean more people employed, more people have money to spend, and our unemployment number is at a 4.1%. And with that number, our stocks, yours and mine, it has gone down. And you might be wondering, Andy, what is the biggest issue here? And the way I perceive it is this is that if you have inflation fears, if people start spending a lot of money for the same amount of resources, you create inflation, and with higher inflation leads to higher interest rates from the Federal Reserve. Now, you might be wondering, if there is higher federal funds reserve, if the interest rate goes up on those, then we have higher competition. Now, you might be wondering, what type of competition? Well, there are some people like me and you who might always be buying into stock market, but there are also other people who might be, let's say, my grandparents, who are interested in a 5% interest yield. For them, a 5% risk-free interest yield in a savings account or a money market account or a certificate deposit, they like that a lot more than taking risk in the stock market. And as a result, those are more competition for the stock market because there's more things for investors to buy into. It's not just stocks. Like I remember back in 2020, we kind of just had stocks to invest in because the interest yields on so many of the savings accounts, money markets, they were so low. Now, not only just savings and money market accounts, you have to also consider bonds. 10-year bonds. The 10-year bond is trading close to a 5% yield right now. Now, this is, in my opinion, a little bit bad because the 10-year bonds, they are correlated with our mortgage rates. So if you're looking at a 5% uh, 10-year note yield, then you're looking at mortgage rates around the 7%, right? So those, it makes it difficult because if mortgage rates are also higher, there's less people with disposable incomes. There's a lot of, special ingredients that's occurring in the stock market right now that's going on the opposite way of stocks. Like it's negative news for the stock market, and that's one of the fears that I can see the stock market having, and why the past months and so our stocks have been performing so low. Now, with all that being said, I am still extremely bullish on the stock market. And here's why. It's because I am investing for the long term, you guys. That is one thing you always have to keep on remembering, that if you're an investor like me, I am 27 years old. I'm investing for the next 30, 40, maybe even 50 years. So because of that, I got so many years to go that maybe a bad year or so is not going to impact my investing plans. I am investing where, even though the next couple years might be bad, I know that in certain time periods, we're going to go back to frothy markets. Because I don't know if you noticed, if you've been investing for a while, you'll see that the stock market goes in either extremes. It either goes extreme fear or extreme greed. It's rarely a moment where we're kind of like fair price. I just don't see those markets too often. It's either in either extremes, extreme fear or extreme greed. Right now, we're kind of getting close to that extreme fear, in my personal opinion, just because the stock market looks like every single day we're getting lower and lower and lower. Now, I need to share with you guys why I am a little bit happy about the stock market going down. I am fully invested into the stock market. It shouldn't make sense why I want the stock market to go down. It's because I would be able to be buying into stocks at a much cheaper price. Like I much rather buy into these assets like Costco, Microsoft, Chipotle, and Google at a lower price in my prime earning years than to buy into these four companies when they're at all-time highs. And our prime earning years is a key factor as well. When we are going into our prime earning years, I do want these stock assets to come down in price so that I can buy more and more shares of these stocks. Because one of the things that I've noticed about the stock market right now, the momentum might be negative, but it won't always be negative. And it's kind of the vice versa on the other way as well. When the stock market is going up and we're all so happy, you also got to consider that it doesn't always go up. It comes down. It'll come down at a single point in time. So you always have to be considering both aspects of the charts. Now, in terms of my personal plays for the week, I actually did buy a little bit more into Microsoft and a little bit more into Chipotle. Now, these two companies, in my personal opinion, I like them so much. And I need to share with you guys why I'm buying into Microsoft. One of the things that I like about Microsoft is that the products that Microsoft sells are sticky, at least in my opinion, that they have a good moat around their business model. When you are having, let's say, the worst type of economic crisis, the worst type of recession, it is very difficult for customers to just turn off Microsoft Azure. Very difficult for businesses to just stop using their Microsoft Enterprise suites. Because of that, I really love their business model, and that even during bad economies, I believe that Microsoft can still succeed. Just like in 2020, when everything was shutting down, Microsoft was still able to make a lot more money than before. Now, when it comes to Chipotle, Chipotle is in a different field. All right, I'll be very honest with that. During a bad economy, there is possibility that Chipotle can go even lower. However, that is a bet that I'm thinking that's not going to happen because the burritos are currently trading at $10.35 and they're the size of my face. I have an oval face, and if they're able to be profitable selling burritos, chicken burritos at $10.35, I believe that during, let's say, worst case scenario recession, people lose their jobs, people would be willing to spend $10 on a burrito. And in a good economy, I believe they can raise the prices even higher. I'm looking very forward to Chipotle keep on increasing its store counts domestically and internationally. One of the things I love about the company is that the whoever is picking the real estate in Chipotle, they seem to be doing a pretty darn good job because the Chipotles that I know of, they're usually in pretty good areas, such as close to schools, close to business areas with a lot of foot traffic, close to just financial district. I love that whoever is the real estate planner for Chipotle, they're doing such a good job. Now, my other two companies that I am invested in, which is Costco and Google. Costco, I am actually very confident that they can go through whatever scenario because the model they have is the revenue subscription model. In that, even if you have a bad economy, their business mission, their mission statement is serving members quality goods at the lowest possible price. And what customer does not want to buy quality goods at the lowest possible price? I believe it can succeed during good economies and bad economies. Now, in terms of Google, Google has gone up a lot the past couple months, and I believe it can actually go keep on going higher with all the lawsuit stuff going past behind them. Now we'll have to see how the new Fed responds to Google antitrust case, but I am very bullish that it's going to be a thing on the behind of Google.